Donald Trump has rattled Europe by threatening new tariffs on 8 European countries, including the UK, unless they back his plan to buy Greenland. My name is Jack Rivas and welcome to this week's episode of Tax Tidbits, where Trump has threatened a 10% tax on imports from February, rising to 25% by the summer if no deal is done. Europe could respond to this threat by reviving currently suspended retaliatory tariffs on about 93 billion euros of US goods, everything from livestock to whiskey. These tariffs could snap into place if last year's EU-US trade deal collapses. The European Commission has also prepared broader countermeasures under its anti-coercion instrument, a heavyweight legal weapon designed to stop economic bullying. Though it's slow, risky, and very much a break glass in case of emergency option. For now, Brussels and London are trying to keep tempers down, warning that a tariff war would mainly punish businesses and consumers on both sides of the Atlantic. The government is rolling out a £15 billion warm homes plan to help households slash energy bills by getting solar panels, heat pumps, and batteries installed in homes over the next 5 years. The plan aims to triple the number of homes with solar power and lift 1 million people out of fuel poverty, with grants and low interest loans. This is set to include £7,500 heat pump grants and extra funding to fully cover costs for low-income households, with estimated savings of at least £500 a year for a typical home, potentially more. The plan has been welcomed by the industry for giving long-term certainty and supporting clean energy jobs, but it has been criticised over running costs and the reliance on imported tech, as 2/3 of the solar panels imported by the UK in 2020, 4 came from China. Alongside this, new rules will require rental homes to meet higher energy efficiency standards by 2030. All in all, the government is pushing electrified heating and homegrown clean power to reduce bills and emissions. England and Wales' water industry is getting its biggest makeover since privatisation, with MOT-style checks, surprise inspections, and mandatory water efficiency labels on things like washing machines and dishwashers. Basically, making sure water companies can't just mark their own homework anymore. The plan comes after years of leaks, pollution and outages, and include £104 billion for infrastructure over the next 5 years. There'll also be company-specific monitoring teams, a new chief engineer as a replacement regulator for Ofwat, and a beefed-up ombudsman to help customers when things go wrong. Critics say it doesn't go far enough, and that as long as profits come first, rivers will keep looking like sludge. For households, it will hopefully mean more reliable water, clearer info on water usage, and someone to yell at if your tap runs brown. The government is launching a new crisis and resilience fund to give people in financial trouble direct access to cash, replacing the temporary household support fund. From April, councils can hand out emergency cash for things like surprise bills, job loss, or housing problems, whether or not you're on benefits, so folks don't have to rely on food parcels or vouchers. The idea is to give people more choice over how they spend their money, while also backing charities and local groups helping out on the ground. Some councils worry the cash might not stretch far enough, but at least knowing the scheme is guaranteed to run for the next 3 years means that families might finally breathe a little easier instead of panicking when the boiler breaks or the fridge dies. Last week we talked about pubs getting their business rates reviewed and how the wider hospitality sector was calling for the same. This week the Chancellor hasn't ruled out extending a helping hand beyond pubs. A package specifically for pubs is expected soon, with £4.3 billion to be put in by the government over 3 years to cap rate rises. After this time, pubs could see bills jump 76% and hotels a whopping 115%. Reeves says she's working with the wider sector and listening to calls from industry and MPs for broader support. Smaller businesses like cafes might dodge the worst of it, but many are still sweating about how to cover the new rates, so there's hope the government could step in before wallets hit meltdown. That is the last story I have for you on this week's episode of Tax Tidbits. Thank you for joining me today. If you liked this video, please make sure to give it a thumbs up and subscribe to our channel. I will see you again next week.